Investors and traders, welcome to the channel Market Chart Pattern. Today is 6th of October 2023 and I hope everyone is having a fantastic day. In this video segment, we are going to take a look at the key US tech stocks, which we always cover for this video segment. And we'll be taking a look at Tesla, we'll take a look at Apple, we'll take a look at Microsoft, we'll take a look at Shopify, NVDA, and quite a few stocks. This video is for educational purposes only and it is not a financial advice. So we are taking a look at the daily chart of Tesla Motors, and here, if you have been following our channel for some time, you'll know that the key pattern formation that we were looking for was right here when we had this abandoned baby bottom formed. We were initially looking for a level around 225. The market did go a little bit below that, but the following day we have this nice abandoned baby bottom pattern formation that took place, and then we have this nice rising trend line here as well. And the pattern that we are watching is that as long as this level of $212 $210 roughly speaking is held, so this abandoned baby bottom is held, we think we are in ABCD pattern formation higher, which could in fact take us to about $350 per share level. So this is the weekly chart, and here the next target for us, as long as this support is held at $210 per share level roughly speaking, then the next one that we are watching for is $350 per share level, and that level could be actually pretty strong resistance when the market gets there. Okay, so let's take a look at the Apple stock. So for Apple, the pattern formation that we were watching for was one-to-one price projection, and also we had 38.2% Fibonacci retracement coming around $170 per share level. So anywhere between $170 to $160 per share level, we were watching that as a key pattern formation. Also because we had this nice rising 200-day moving average. And what we have seen is market come as low as the low was $167.62. So right in the kind of the zone that we were watching for, and we have seen a nice move higher in Apple. And especially today, we have the non-farm payroll come out, and the surprising thing is that the figures were pretty hot. So a hot report, strong figures, jobs creation, and initially, if you're watching the broader market, for which I'll do a video tomorrow, we saw the knee-jerk reaction, which was to the downside. However, when the market opened, we did not see price move lower. So we saw price rejecting lower price, a lower move lower, and we saw a very nice move higher. So that is something we'll talk about in our video for the broad indices, which will be done tomorrow. So stay tuned for that. So now it's moving higher nicely, and also the price today closed above the 20-day moving average. That's the short-term moving average that we like to watch for momentum purpose. Taking a quick look on the weekly chart. So here we can have a look. Now it could easily go up to about $182 per share level, where we have the 20-week moving average, and the momentum seems to be getting stronger for this stock. Let's take a look at the Microsoft. So Microsoft, again, the level that we were watching for was about $310 per share level, because that is the 38.2% Fibonacci retracement off the bottom, performed back, which I would like to call it double bottom, beginning of January 2023. And the market came and tested, well, it reached this, pretty much tested this level around the 18th of August. It had a little bit of a rally, found resistance from pretty much about 38.2% Fibonacci retracement, and then this is the key part. The market came down, tested this low again, went a little bit lower, right to the 38.2% Fibonacci retracement, and now it has taken this swing high out and pretty strong close today above the 20-day moving average. So that's from a momentum perspective as well. The price is getting stronger, and the key part is that this 38.2% Fibonacci retracement. As long as it is held, then it means it was quite a shallow retracement, which indicates a stronger move higher. But the key part is that the 38.2% Fibonacci retracement remains as key support and it's not broken to the downside. We could see a pretty strong move in the Microsoft stock to the upside. So let's quickly also take a look at the weekly. So on the weekly basis, since 38.2% Fibonacci retracement is providing pretty strong support. I'm not sure whether we'll see this ABCD pattern formation, which could take this stock lower to about $300 per share level. So we'll just be watching this, and I think in the future videos, in the next weekly video, probably remove this if this pattern is likely to not form because of 38.2% Fibonacci retracement being pretty strong. Let's take a look at NVIDIA. So NVIDIA found resistance, a pretty strong resistance from 495 or roughly 500 because of this 1.61 expansion. Came down, tested this area. Now it's rising higher. So it remains in a range bound. The chances are that perhaps it could even retrace to about $350 per share level. But again, it could also be a double pattern, a double bottom formation here. So watching this one. Let's move to Netflix. So the Netflix one is really interesting because it has, again, in my opinion, actually completed our pattern formation. We were watching for this zone, which is drawn like this. We were watching this 38.2% Fibonacci retracement. Also, it has done a nice one-to-one price projection, the ABCD right at 38.2% Fibonacci retracement. It is a pretty strong pattern formation. So this is going to be a pretty strong support. Also coming right at the 200-day moving average. And should the price get above this 20-day moving average, then the momentum, shorter-term momentum, will also be turning positive. So things seem to be looking pretty good for Netflix stock, as long as it's 38.2% Fibonacci retracement. It provides, it's not broken to the downside. We should see a move begin to the stock begin to move higher. So in my opinion, if you also draw a trend line here, we have trend line support as well. So my trend line is not drawn properly. Well, yeah, I mean, you can draw it. This is the thing about trend lines. That's why I don't draw too many trend lines. But you can argue maybe this one might be a correct trend line as well. Okay, so let's take a look at Meta. Wow. So the Meta stock is, as you can see, pretty strong. It had a pretty shallow retracement here. We were initially thinking, much like the Netflix stock, it might do a ABCD price projection as well, right to the 38.2% Fibonacci retracement. But the stock seems to be defying that, so that's good. The stock looks pretty good from momentum perspective as well. And look at the 200-day moving average and 20-day moving average above 200-day moving average. Excuse me. Now, let's take a look at Shopify. Apologies. Still recovering from a little bit of cold. So the Shopify stock is very interesting at the moment, at this juncture. It was moving really nicely in this general formation, and that formation actually broke. So what we were looking for was this one-to-one price projection ABCD, which would in fact take the stock as to about $47 per share level. But what we are seeing is a sideways action around $50 per share level. While the possibility still remains, it could touch 47.50 perhaps. The stock is consolidating right at the 200-day moving average, and the chances are that perhaps the stock is actually also this is all that we might get to the downside, and the stock will begin to recover. So our ultimate target for it will be about $82 per share level. because that is the 38.2% Fibonacci retracement. So we'll have to wait, watch, and see the price action, and if the price is able to actually move to buy $80 per share level. So the next stock we should take a look at is Baba. So Baba is an ADR. It's not a US based tech stock, as we know, but it's traded on the New York Stock Exchange as an ADR, um, American Depository Receipts. So we'll also take a look at that. So here the key pattern that we are watching is the ABCD, and the key thing is, as long as this C point is held, the chances are that it's gonna go and maybe reach this 142, about $145 per share levels. This is what we are watching in the stock Baba. Let's take a look at Roblox. So the Roblox price action had been actually disappointing for us, but we still like to watch it because we are taking a look at the theme of metaverse. So Meta, formerly Facebook, and then this stock is also related to that. So yeah, the price has recovered somewhat. It seems to be maybe recovering here, so we'll just keep on watching it. But our key pattern formation that we were watching, that actually broke down, but we'll just keep on watching how the stock is gonna do. Symbiotic. Okay, so this is another stock that we have started to recently follow. This stock is related to artificial intelligence, and as we know that artificial intelligence is a key hot topic these days. Also, it's quite revolutionary based on what is happening in the artificial intelligence. So this stock is related to that, and the key thing is that after the IPO, it just went through the usual IPO cycle, huge fluctuations, and then the price actually came back and touched the, or went a little bit below the IPO price, and then it has had a nice steady move higher, from roughly $9 to $64. That's pretty amazing run. And so what we are watching now is that the stock has retraced to about 61.8% Fibonacci retracement of that, and there is 200-day moving average. So it does offer a lower risk opportunity in this stock, because of this confluence zone, and today the stock had a pretty good run as well. So we will keep on watching this, and it also appears that the momentum is also turning positive for this stock, and the theme that it is related to, which is artificial intelligence. This stock actually could be a good performer. Again, the key part is this 61.9% Fibonacci retracement around $30 per share level. As long as that is held, the stock could be actually recovering, and make, at least will try to make a recovery high, if not go higher. So we'll keep you informed, as we'll cover this in our midweek and weekly updates for this segment, in which we cover the key US tech stocks. So thank you very much for watching the video. If you found this video of educational value, please do click the thumbs up button. And if you like how we try to look at the markets in general, using the technical analysis, pattern recognition, Fibonacci ratios, then please just subscribe to the channel, and hit that bell icon button. That way you will know when the new videos are posted. So thank you very much for watching the videos. Good luck and good trading, and have a great weekend.